to talk more about that Japanese government stimulus. $81 billion is what the Japanese government plans to pump into its moribund economy. This is the fourth stimulus since September of 2008.
It is. Japan is the world's second largest economy, but has the world's largest public debt. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Paul Rathbone joining us now from London. So, Paul, where's the money going to come from?
Well, that's a very good question, and it's not very clear. The economy really is on a war footing in an almost literal sense, in the sense that bond issuance this year is going to be higher than tax revenues for the first time since 1946. And even Japanese government ministers are starting to worry about Japan's public finances. So I think the short answer to your question is a little bit from here and a little bit from there, and perhaps a third from spending cuts that were deferred from the last stimulus program under the previous government.
Paul, what does this tell us about the fragility, let's say, of the Japanese bond market?
Well, it's often said that bond traders have, the trading floors of investment banks have got more corpses of traders who've shorted the JGB market than any other market anywhere else. And it's a very anomalous market in the sense that over 80% of the market of the bonds themselves are owned by Japanese institutions, especially the banks. So everything hinges rather on whether Japanese banks continue to buy Japanese bonds. But for example, it's often said that Japan can afford its huge amounts of debt because it's got a captive pool of savings. But interestingly, the Japanese saving rate is now lower than the US saving rate. So what has been a source of liquidity and savings for the rest of the world may not be so for that much longer.
Paul, we heard earlier today from Stephen Roach, the chairman of Morgan Stanley Asia, that $81 billion simply isn't going to be enough with the aging population in Japan and the low birth rate. Do you have a view on that?
Well, it's been designed to prevent a double dip recession. In fact, Japan is going to probably have the second highest growth amongst G7 economies this year. But with deflation running at about 2% a year, the medium-term prospects, or maybe even the short-term prospects next year for the Japanese economy are not good. All told, I think Japan's stimulus package has been about 5% of GDP. So it may well not be enough to get the government out of the economy out of its hole. But nonetheless, there is this delicate balance between the need for more stimulus spending and Japan's ability to finance it.
All right, Paul, thanks for joining us. That's Paul Rathbone of the FT's Lex Desk. He was joining us from London.